All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And, well, we got some FUD going around that may have damaged the price of cryptocurrency temporarily. Nothing new, just some FUD as usual, and some flip-flopping by India. In fact, I made a video maybe 4 or 5 videos back talking about how India was planning on not banning cryptocurrencies. And in that video, I said India is one of the most flip-floppy countries in the world when it comes to cryptocurrency. It's been, we're going to ban it, no, we're not going to ban it, we're going to ban it, and no, we're not, over and over and over. And here we go once again. India to propose cryptocurrency ban penalizing miners and traders. India will propose a law banning cryptocurrencies, fining anyone trading in the country or even holding such digital assets, a senior government official told Reuters, in a potential blow to millions of investors piling into the red-hot asset class. The bill, one of the world's strictest policies against cryptocurrencies, would criminalize possession, issuance, mining, trading, and transferring crypto assets, said the official who has direct knowledge of the plan. So, again, seemingly unofficial. Could this be fake news? Could it just be FUD? Who knows? But basically, India flip-flops on this all the time. In a few months, we may have a news article out that says that they're not going to ban cryptocurrencies, and then 6 months later, they will ban them again. The measure is in line with a January government agenda that called for banning private virtual currencies such as Bitcoin while building a framework for an official digital currency. But recent government comments had raised investors' hopes that the authorities might go easier on the booming market. Instead, the bill will give holders of cryptocurrencies up to 6 months to liquidate, after which penalties will be levied, said the official who asked not to be named, as the contents of the bill are not public. Officials are confident of getting the bill enacted into law as Prime Minister Narendra Modi's government holds a comfortable majority in Parliament. So with that said, we basically went from 61,000 or 58,000 or so, wherever we were at the time, back down to 56,000. So we lost just a little bit in this FUD, so not too big of a deal, but India flip-flops once again, plain and simple. So if you're wondering why the market is down just a little bit today, that could be quite the reason. So moving on here, new EIP hopes to quell tensions between Ethereum miners and developers. So it looks like the protesters may be winning in terms of convincing the Ethereum developers to make some sort of change to continue their egregious profits. That's basically it. Still doesn't help the fact that most users cannot use Ethereum because the fees are so high, or at least it prevents them from using it as much as they would want to use it, just due to fees. I'd say once the fees are actually low, from maybe Ethereum 2.0 or some other EIP in the future, or some other change, etc., sharding, whatnot, DeFi will explode again. It will be way bigger than it is, because right now you simply can't day trade on DeFi because you're paying 30, 40, 50 plus dollars in fees every time. So you can just make one big purchase of some kind of token and then one big sell of said token and hope that the liquidity just doesn't drop on you, because on DeFi you cannot see the order book, which kind of makes sense because it's a decentralized exchange. But if you're unable to see the order book on DeFi, then you're just going to eat a ton of slippage on the exchange, which it tells you a percentage of slippage, but it's usually pretty much dead wrong. So moving on here, a new Ethereum improvement proposal, or EIP, has emerged amid opposition from miners to schedule changes to the network's fee market. While some are looking to the proposal as a means to cool flaring tensions between Ethereum's miners and developers, the EIP appears to have secured little support from the community. In recent weeks, tensions have escalated over EIP 1559, the upgraded or slated for integration in July, that is expected to discipline Ethereum's volatile fee market while significantly impacting miner revenues. The new proposal, EIP 3368, advocates that block rewards immediately be increased to 3 Ether, which they were 3 Ether. I'm not sure actually when it thirded. It was like a year or two ago. Ethereum used to be 3 per block, and then it went down to 2, which it is currently, and then reduced to 1 Ether over 2 years ago. Okay, fair enough. Following EIP 1559's implementation to ease the impact on miners of Ethereum's transition to proof of stake. on Saturday, Ethereum developer Tim Biko took to Twitter to share EIP 3368, encourage robust debate over the proposal within the Ethereum community. While Biko emphasized that EIP 3368 is not accepted or scheduled for a fork yet, the developer described the proposal as the most tangible thing to come out of the miner conversations regarding EIP 1559 in the past weeks. So while many mining pools have long opposed EIP 1559, news that the upgrade is scheduled for deployment in July saw prominent miners threaten to organize a show of force in which EIP 1559's opposers would divert their hashing power to a single pool for 51 hours. So basically, coming out of my Twitter to break this news, counter proposal to EIP 1559 is EIP 3368, which would raise the block reward to 3 Ethereum and lower it to 1 ETH over 2 years. So essentially every quarter, they would lower it by maybe 0.25 or something like that, or maybe every half a year they would lower it to by 0.25. So something along those lines, they would lower it over the course of 2 years. So we have been heard. EIP 3368 has been proposed. Reward to 3 ETH, but drops 0.25 every quarter till 1 ETH over 2 years. Okay, so basically 0.25 ETH every quarter till 1 ETH. Over 2 years. I'm going to rescind the show of force to etherchain.org April 1st, and so should all of you, unless you were already on Ethermine. So thanks, Red Panda Mining, for guiding us all of our hash rate for us. I've lost a lot of respect for Red Panda Mining. Thank you, because we needed that. While the comments from Red Panda Mining and Biko suggest Ethereum's miners and developers may be readying to work towards some form of compromise, discussion regarding EIP 3368 on the Ethereum Magicians Forum suggests Ethereum's community is still very divided. So basically, the miners are whining. So basically, everybody is giving the miners additional revenue by using Ethereum, and that's nothing new. But because of Ethereum's developers working so slowly in increasing this, the market has exploded. DeFi, all this stuff, yield farming, yada, 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 smart contracts, everything being used on Ethereum is raising the fees egregiously. The current block reward is 2 Ethereum, and the average fees in total giving out to miners are greater than that. They're 2.2 or 2.4 Ethereum, which is absolutely outrageous, considering Bitcoin is usually something like 6.25 Bitcoin currently with the block reward, and then something like the fees are usually 0.3 Bitcoin or 0.02 Bitcoin or something like that, depending on the usage, which is nowhere near more than the actual block reward. Otherwise, there would be so much inflation, or not inflation, but rather sell pressure on Bitcoin. And that's basically what we have going on right now. If it wasn't for the unbelievable amount of fees going to miners right now, Ethereum would be well over $2,000, period. You would be able to use it a little bit better. EIP 1559 doesn't necessarily lower fees. It's pretty important to know that, but it doesn't let the fees just shoot up wildly and shoot downward wildly. It's going to set an amount based on the usage of Ethereum, which is going to be quite a bit better, in my opinion, at the very least. But thank you, Red Panda Mining, for telling us all what we need to do. What would we do without Red Panda Mining? Nearly $40 billion in U.S. stimulus checks may be spent on Bitcoin and stocks, says a survey. So the research by Mizuho Securities estimates that of the $380 billion total, close to 10% could be used to purchase the 2 asset types. Nearly 2 in 5 Americans expecting to receive checks in the coming days anticipated using a portion of them to invest, the company found. Bitcoin is expected to account for 60% of the total invested, which could add as much as 3% to the cryptocurrency's market value. Dolev cited a number of crypto-adjacent companies that he believes will benefit investors most should they wish to invest in equities: Visa, MasterCard, PayPal, and Square. The survey polled roughly 235 Americans with less than $150,000 in household income, of which around 200 expected to receive payments from the latest round of stimulus. So basically, their $1,400 checks, $40 billion of it is likely to go into the stocks or cryptocurrency in total. So, hey, there you go on that one. There's going to be a pump sooner or later here. They say it could increase Bitcoin by 3%, which is, not too crazy, but it's certainly a lot of money piling back in. So moving on here, Bitcoin falls near 55,000 level as over 1 billion in crypto futures are liquidated. So this is a quite egregious amount of liquidation. The price of Bitcoin has fallen to near 55,000 from 61,000 on Saturday as derivative positions worth over 1 billion get force liquidated by crypto exchanges. In the last 24 hours, around 1.15 billion worth of open interest was liquidated by crypto exchanges. This is why you don't use margin calls, guys. According to margin trading, according to Tracker Bybit, that means crypto exchanges liquidated traders over leveraged positions, which is basically long. So an incredible amount of liquidations going on. Guys, stop using leverage. Just trade randomly or just hodl. You know, come on, get real. You're going to get wrecked. Moving on here, DeFi exchange PancakeSwap warns of hack. Do not use the website. So decentralized exchange Pancake Swap has been attacked by hackers per a tweet. Earlier today, a similar service called Cream Finance, which is just a really great name. That's a super good name. Said its DNS, its domain name service, has been compromised by a third party. PancakeSwap's Twitter account then confirmed that it had been attacked through the same mechanism. A DNS hijack is when an attacker reroutes traffic toward a malicious server. In this case, the hijacked site was after credentials for users' accounts. So PancakeSwap says, this is now confirmed. Do not go to the PancakeSwap site until we confirm it is all clear. Never, ever input your seed phrase or private keys on a website. We are working on a recovery now. Sorry for the trouble. So unlike a traditional exchange where assets are traded through a central authority, a decentralized exchange uses smart contracts that allow money to flow directly between traders. Decentralized exchanges tend to fall under the rubric of DeFi protocols, which are broadly defined as non-custodial systems for handling crypto. Crucially, PancakeSwap's smart contracts have not been hacked. Only from the front end of the website has been affected by this hack. So basically, the smart contract is fine, but somebody took the website, DNS hijacked it, and now when you go there, you're giving your information to the hackers. So yeah, don't go to PancakeSwap sites. Yeah, don't do that. So moving on here to CoinMarketCap again, 56,472 Bitcoin after the FUD, 1,795 Ethereum, which I think would be much larger with EIP 1559. Right now, I think Ethereum miners are simply getting way too much in fees. And what are they going to do with that fees? Well, a lot of them probably sell instead of hodling it because they should know that eventually, the EIP 1559 is going to go through and the fees are going to be burned. They should know also that proof of stake is coming sooner or later, so you're not going to be mining forever, probably still for quite a little while, but you're not going to be mining forever. So if you are an Ethereum miner, you should be holding on to your Ethereum for either the deflationary aspect of EIP 1559 or at least proof of stake in general, or why not put your 32 ETH at a time if you are a big miner, put your Ethereum into a staking node so that way you're getting staking rewards and you're getting mining rewards, at least until mining stops as well, and hodl on for the future. But instead, they're whining and moving their hash rate around, which is actually just affecting their own income because when you move your hash rate, particularly to a PPLNS mining pool, I could talk, I swear, to a mining pool, then you're just really lowering your own hash rate and you have to go back and then you have to do your shares over time. And then so you're basically just costing yourself money by stopping mining and switching your hash rate over. I don't know why you would. Apparently it's working because at least they're talking about a new EIP proposal instead. Also, it's kind of backfiring at the same time because the Ethereum developers now want to push out proof of stake even faster than they did before. So hey, just be happy with your outrageous amount of Ethereum income currently. The fees are too much. It's really affecting the entire Ethereum community, aside from the miners, the developers, the users, and everything in between. But that's all I have for you guys today. Make sure you like, subscribe, share the video. That helps me out a lot. My social media in the description below. Give me a follow on those if you get the opportunity to do so. And as usual, I will see you guys next time.